The Dow is still in an uptrending bias in that today it could not close back below the T-line. And we had the potential of a J-hook pattern after a strong rally off a double bottom. Stochastic still slowly heading up. This doesn't tell us that we're in a reversal, and it doesn't tell us that we have stopped the uptrend. There hasn't been any real powerful signals yet to tell us that the uptrending progress is still capable. So when we have this kind of choppy situation, that's when we have to go to specific candlestick patterns and signals to tell us what is still in an uptrend and what is starting in a downtrend. For example, in our recommendation on LNG, that was done based on the kicker signal that started this individual stock price in an uptrend. We also had seen that many other oil stocks had gotten strong signals on that day, and that allows us that on days like this, where there's weakness, that we have to analyze the other factors that would be contributing to a potential uptrend, such as our stochastics are starting to curl back up. Number one. Number two, we did a kicker signal above the T-line. That still has to be represented as a uptrend until we see a sell signal and a close below the T-line. So we have to add other features to our analysis, that even though we have days that look like it's time to sell, we need to have those confirmed. There's always sell days during an uptrend. And illustrated in our recommendation for DK, when we had the nice little breakout with a doji up through the T-line, bullish confirmation, stochastics heading up, breaking out through this downward channel. There could have been some nervous times of when to get out of this position. We had everything applying to this position that told us that we were in an uptrend. We had the next day a doji, followed by a bullish confirmation. And then, even though the market has been up or down, we have not had that qualifier of close below the T-line to tell us it's time to get out of this position. So this makes it much easier when you know how to use candlestick signals to evaluate what the price is doing on an individual stock versus what the market is telling us prices should be doing. Again, the candlestick patterns allow us to make decisions that are much more probability oriented than most other trading mechanisms or methods. For example, hogs had a very strong breakout up above the T-line after a couple of dojis off the 200-day moving average. Some very good gains. Then it went sideways, which was to be expected. The further away you move from the T-line, the more likely it's going to come back and test the T-line. Now you've had a doji right on the T-line with bullish confirmation, creating a little morning star scoop type pattern. And today it closed as a doji. This makes very simple trading for the next day. If it opens positive, you want to buy immediately. If it opens lower, they're coming back to test the T-line. You come out of the position. Simple trading rules for each pattern and signal allow the candlestick investor to take advantage of high profit trades with high consistency. That'll be it. We'll see you in the chat rooms.